The next step in the accounting process after recording the journal entries and posting those journal entries to the general ledger is to create a trial balance. Again, in an accounting system, this would happen automatically after you made the journal entries. It would automatically update the accounts for the new numbers, and it would create a trial balance whenever you clicked a button to run the report or to run the trial balance. All a trial balance is a list of the accounts and their ending balances. Remember that the general ledger was showing us every single account and all of the ins and outs, the debits and the credits, throughout the entire period. So for us, it was just January, but in a normal accounting period, it might be a month or a year. Okay, so we're going to look at the journal entries here that we made already and the general ledger here with all of the ins and outs. And we're going to complete requirement 3 to prepare an unadjusted trial balance at the end of the month. So all we need to do is pick each of our account titles here, and next to cash, for example, looking over here at the general journal, I can see that I have an ending balance, a debit balance of $117,600. So I'm going to put that here, $117,600. Our unadjusted trial balance, again, is just a report of all of our balances, all of our accounts, and their current ending balance. It's just a list. So now the next one, I'll move on to accounts receivable. And it doesn't matter what order you put these in, 60 or 6,000. Although I tend to put my accounts that are similar to one another together. Inventory is our next one. And we'll put a balance of 22,000 there. Then we'll take prepaid insurance, also an asset. Actually an asset that represents a deferred expense, 2,400. Then we'll do prepaid rent, which is just like prepaid insurance, also a deferred expense of $2,000. It's a resource until we get something in return. Then it's an expense. Accounts payable. That one has a credit balance. All liabilities should have a credit balance. And notes payable, same thing, a liability. It represents a claim to our resources that belongs to creditors, 30,000. Common stock is a paid in capital account. It represents a claim to the resources of the business that belong to the owners because they originally contributed the capital to begin with. Then sales revenue. And this is where we tend to have some mistakes, is when you get to the revenue and expense accounts. Remember, revenues have credit balances. A credit increases a revenue account because a credit would increase retained earnings. And we have 22,000. So retained earnings is another capital account under the stockholders' equity section of the balance sheet, and it represents the earned capital of the business rather than the paid in capital like common stock. And our revenue and expense accounts are simply temporary accounts that represent any increases or decreases in retained earnings. So cost of goods sold is the next one here. And it has a debit balance because it is meant to reduce earned capital. So while a debit increases the cost of goods sold account, it is going to decrease retained earnings. And we'll finish this off with the rest of our expense accounts. Salaries expense for $6,000. Rent expense for $2,000. And finally, utilities expense. And if we're looking down at the trial balance, oops, let me fix that one. Utilities expense. The two numbers down here should match. All of my debits should equal my credits. It shows us basically the company's, all the company's resources, and then down here from this point forward, who can claim them, whether it's somebody else outside the company or somebody inside the company. So utilities expense is $1,000. And now you can see my debits equal my credits. The next step would be to take this unadjusted trial balance and prepare some adjusting entries for anything that needs to be recorded during the year or that needs to be accrued. So now we're ready to prepare our balance sheet. Now that we're done with our unadjusted trial balance, we can prepare some adjusting journal entries and then update this trial balance for those entries. Once we're done with that, we can create our financial statements.